Hello everybody, it's Stephen, and today I'm going to be doing another video in this educational series. So today I wanted to tackle an extremely interesting subject, a subject which I'm sure is close to all of the listeners' hearts. And that subject is how to control your emotions when investing. So I'm sure all of my listeners today are all from different backgrounds, different upbringings, have different genetics, are from different countries, and have different values. And this is very much going to affect your emotional intelligence and the way that you deal with emotions. I think that people automatically think that when they start investing, that they need to learn the key investing terminology first. And they also need to learn when to buy stocks, when to sell them at the right time, how to set a stop loss. And although these things are important in the grand scheme of things, to me, it is much more important to learn how to manage your emotions when investing. You need to learn how to manage your emotions during the great times and during the bad times. And I think over 80% of your success is going to come from being able to manage those emotions. And only 20% of that is going to come from the knowledge that you acquire over time when learning to invest. The stock market can be an extremely harsh mistress. Stocks can go up and stocks can go down quite rapidly. Markets can boom and markets can bust. And although we are predispositioned with some aptitude for emotional intelligence, how we deal with our emotions is entirely up to us. And this can be trained upon over time. And this doesn't mean that the stock market's for everybody, right? Not everybody wants to be selecting their own stocks and watching them closely over time. And that's why Vanguard invented the ETF. And that's why, to a degree, that the popular investors like myself are on the Etoro platform. And for those who are interested, and for those that do have an emotional intelligence aptitude, this skill set can be extremely lucrative for you over the long term as you invest in the markets. So I generally have quite a calm persona and I'm able to control my emotions most of the time. But that doesn't mean that this has always been the case to this level and this degree. I have been investing in the markets for over 10 years and I have made my fair share of mistakes over the years, and I have on occasion got emotional, and this can be detrimental to your results. It's about how you control those and how you improve over time that will show whether you're going to be successful in the markets or not. So how do I go about doing that, you may ask? Well, my number one point is no could-haves, no should-haves, and no would-haves. I think over your investment lifetimes, you'll be faced with many situations where you will make mistakes. This is absolutely inevitable. I have done this many times and I still continue to do it today, although I'm improving. Well, you may sell a stock too early and it may go on to 10x, or you may buy a stock which you think is very promising and then the situation changes and it goes down in value. So don't look back too much. This can be an extremely destructive habit. So what if you didn't make the maximum gains you possibly could from one stock, or you lost on one stock? The markets are a marathon, not a sprint. So look to the long term, zoom out, and make the right decisions and stay calm. The second important point is to stick to your long-term strategy and a trading plan. Don't get too wrapped up in the day-to-day movements of the stock market. In this case, stocks can go up and stocks can go down, but you don't get too anxious or overly worried, because you know when you are going to take profits from a trade, and you may have stop losses in place so that your portfolio isn't negatively affected if a stock is to go down. The third important point is to have conviction in the investments that you make. You get this conviction by absorbing as much information as you can about an asset and really understanding the value. This is called due diligence. That way, if the stock market fluctuates, you will understand the core value and the future of that investment that you have made, and you will sleep a lot easier at night. The third point is to sustain your emotional health. That means that you should do as much as you can in order to keep your mind healthy. This might be doing the hobbies that you enjoy, spending time with your family, whatever that is to switch your mind off and keep your mind healthy. Don't check your stocks or your investments all the time. If you need to delete the apps off your phone to stop the temptation of you doing that, then you do that. Because by checking all the time, you are going to put yourself in an emotional state that is going to be negative for your long-term returns. So keep yourself in a healthy mindset. The fifth important point is not to give in to euphoria. Do not chase markets and do not listen to the so-called gurus out there when they tell you to buy a specific stock. When you're investing in the stock market yourselves, it is important to be accountable for your actions. And if you are accountable for the trades that you make, this will put you in a much healthier headspace rather than just listening to what others tell you to buy. So I'm not telling you to become robots or to switch off your emotions. Actually, far from it. Sometimes it's important to harness those emotions in order to be able to have gut feelings which can help you in the market. However, you need to learn how to control these effectively. When you have a fear or you have these butterflies in your stomach which are making you uncomfortable, you need to know that sometimes that can be the best time to invest. Comfort doesn't mean good returns. So I will give you a personal example of myself. So I've been in crypto since about 2016 and have been a strong advocate. In 2017, we had a big boom in crypto market. The markets went up incredibly. In 2018 and 2019, a lot of that adulation, a lot of that interest had gone from the market. The prices slumped and many people were simply not interested in investing anymore. However, that is the time where I harnessed those emotions and I bought as much crypto as I possibly could in order to ensure my financial freedom. I was not comfortable in making those purchases, but I knew that the fundamental and the future of crypto had not changed. So that meant that that was the ideal time for me to make those purchases. And I'm very glad that I did. Thank you very much for listening to my video today. I hope that you found it extremely informative and you learned some ways that you can control your emotions. Don't be so set on the fact that you need to do this from day one. This skill takes time to be refined. So be gentle on yourselves and continue to improve. Please subscribe to my channel and look out for future videos as I release them. My goal is to make you better investors over time. So have a lovely day and I'll speak to you all soon.